In a landscape marked by rapid technological advancements and shifting regulatory frameworks, significant movements in the cryptocurrency sector continue to capture the attention of investors, tech enthusiasts, and the general public alike. Recent developments highlight a blend of innovation and security concerns that are shaping the future of digital finance. A striking incident occurred in Paris where the daughter of a prominent cryptocurrency executive narrowly escaped a kidnapping attempt. This alarming event underscores the growing risks associated with wealth in the digital currency space as high-profile individuals become targets for criminal activities. While the details surrounding this attempted crime remain sparse, it raises critical questions about the safety of those involved in the volatile crypto market and the broader implications for security measures within the industry. On a more positive note, JPMorgan Chase has made headlines by stepping beyond its previously established walled garden approach to blockchain technology. The bank has recently settled a transaction on a public blockchain, a significant move that could pave the way for greater integration between traditional finance and the rapidly evolving crypto sector. Leveraging its blockchain division Kinexys, JPMorgan transferred funds between its private accounts to facilitate the purchase of tokenized treasuries on a public ledger operated by Ondo Finance. This transaction utilized Chainlink, a communication protocol that connects blockchain networks to external data sources, marking a landmark moment in JPMorgan's blockchain journey. Nelly Zaltzman, head of platform settlement solutions at Kinexys, emphasized that this initiative has been part of JPMorgan's roadmap for several years rather than a reaction to recent regulatory shifts. Meanwhile, industry optimism is further buoyed by the changing political climate in the U.S. With a notable turn toward pro-crypto policies under the current administration, which could foster a more enabling environment for digital asset companies. In another significant development, the crypto platform BitGet Wallet has launched an innovative in-app marketplace called Shop with Crypto, allowing users to make purchases directly from over 300 global brands without needing to convert their holdings into fiat currency. This feature enhances the practical utility of cryptocurrencies, enabling users to buy everything from gift cards to travel services and gaming credits seamlessly. Alvin Can, COO of BitGet Wallet, highlighted the unique capabilities of the wallet, aiming to bridge the gap between digital assets and everyday spending. The increasing adoption of cryptocurrency for real-world transactions, as exemplified by the recent launches from BitGet and the advancements at JPMorgan, signals a broader acceptance of digital currencies. This trend not only enhances the functionality of cryptocurrencies but also speaks to the industry's potential for integration into mainstream financial systems. As the cryptocurrency landscape evolves, stakeholders must remain vigilant about security while embracing innovation. The juxtaposition of criminal attempts against high-profile individuals with technological advancements in blockchain and digital asset markets illustrates the complex dynamics at play. Looking ahead, the continued interplay between regulatory shifts, technological innovation, and real-world applications will undoubtedly shape the trajectory of cryptocurrencies, offering both challenges and opportunities for investors and users alike. In recent days, the cryptocurrency market has experienced a flurry of activity marked by Bitcoin's remarkable ascent and the surprising performance of altcoins. Bitcoin, the leading digital asset, briefly touched the $105,000 mark, propelling itself to a new high for the year, while smaller cryptocurrencies like XRP surged even higher, showcasing a shift in market dynamics. As investors and analysts scramble to interpret these developments, a closer examination reveals a complex interplay of geopolitical events, market sentiment, and historical performance indicators. On Saturday, Bitcoin BTC USD reached an impressive $104,500 before retracting slightly, a 1.5% increase over the preceding 24 hours. The cryptocurrency's rise was fueled by a series of diplomatic breakthroughs following a significant meeting between U.S. President Donald Trump and Chinese officials in Switzerland, which Trump described as a total reset of trade relations. Additionally, a ceasefire announcement between India and Pakistan and Russian President Vladimir Putin's willingness to engage in talks with Ukraine further bolstered market sentiment. Ether ETH/USD also showed strong performance, climbing 7.7% during this period. The altcoin market has been characterized by mixed results. While prominent tokens like Solana SOLUSD and Dogecoin DOGE-USD experienced declines of 2.35% and 3.34% respectively, other cryptocurrencies like PI demonstrated phenomenal growth, surging by 62.83%. This divergence highlights a growing trend where smaller, less established cryptocurrencies are capitalizing on market volatility and investor interest. The current excitement surrounding Bitcoin is underscored by its remarkable price trajectory, having surged from around $75,000 to nearly $106,000 in just 30 days. This meteoric rise is reminiscent of previous bullish trends but raises questions about sustainability. Market analysts are noting caution, particularly as the Bitcoin Fear and Greed Index has reached a level of 70, indicating heightened greed and a potential for market correction. When sentiment is overly positive, it can often lead to a pullback, cautioned Mark Mason from Bitcoin Magazine, emphasizing the importance of monitoring market indicators. An analysis of historical data reveals that swift price increases often precede corrections. Currently, 99.7% of days holding Bitcoin are profitable. A sign of market health, but also an indicator that many investors may be inclined to take profits if prices begin to stall. Key metrics such as the MVRV Z-score suggest that Bitcoin is approaching levels that could indicate overvaluation, and the advanced NVT ratio indicates that the market might be overextended. Despite the potential for short-term volatility, the macro outlook for Bitcoin remains optimistic. The MVRV momentum indicator indicates that Bitcoin has reclaimed significant moving averages, a historical signal suggesting bullish market conditions. Yet as Bitcoin navigates these highs, it is crucial for investors to remain vigilant, as the market's growth could benefit from a healthy cooling-off period. In conclusion, while the recent surge in Bitcoin's price signals a renewed bullish sentiment in the cryptocurrency market, caution is warranted. Investors are advised to focus on data-driven analysis rather than emotional reactions to price movements. As the market digests the implications of recent geopolitical developments and assesses the sustainability of current trends, the potential for both gains and corrections looms large. The coming weeks will be pivotal in determining whether this rally is a precursor to lasting gains or a prelude to a significant market correction. In an unprecedented intersection of celebrity, cryptocurrency, and controversy, former President Donald Trump's foray into the world of digital currencies has raised eyebrows and ethical questions across the political spectrum. As the $Trump memecoin continues to gain traction, recent events highlight the complexities and potential conflicts of interest surrounding Trump's burgeoning crypto ventures, particularly in light of investments from foreign entities. This week, GD Culture Group, a little-known technology company with ties to China, announced plans to purchase up to $300 million worth of the Trump memecoin. Despite its financial struggles, having reported zero revenue last year, the firm expressed intentions to enhance its balance sheet through this investment, which it plans to finance via a stock sale to an undisclosed entity in the British Virgin Islands, a well-known tax haven. This move has alarmed ethics experts who argue it presents clear conflicts of interest as Trump continues to pursue a deal to keep TikTok operational in the U.S. This is completely out of bounds and raises all sorts of ethical, legal, and constitutional issues that must be addressed, remarked former Representative Charles Dent, a Republican who previously chaired the House Ethics Committee. The fact that profits from the Trump coin flow directly to the Trump family intensifies concerns about foreign influence on U.S. politics, particularly considering the coin's speculative nature and its appeal to international investors looking to curry favor with Trump. The Trump coin was launched just days before Trump's inauguration and has since fluctuated wildly in value, mirroring the volatile landscape of cryptocurrencies. According to data analytics firm Inc., digital buyers have spent over $140 million on the coin recently, motivated in part by the offer of an intimate dinner with Trump for the top holders. This promotional tactic has raised alarms among lawmakers and watchdog groups who see it as a troubling example of merging personal financial gain with public office access. The dinner set to take place at the Trump National Golf Club in Washington, D.C. has attracted significant interest, with some holders spending as much as $16.4 million for an invitation. Critics argue that such mechanisms could pave the way for foreign entities to exert undue influence on U.S. political processes. If a mayor of a small town was selling meetings at City Hall for $1,000, he would be run out of town on a rail, remarked Senator Christopher S. Murphy, highlighting the disparity in accountability between local officials and former presidents. This week's developments also illustrate a concerning pattern of foreign investments linked to Trump's ventures. The GD Culture Group's announcement marks the first known investment in the dollar Trump coin by a Chinese-linked firm. In its filings, the company acknowledged potential influences from the Chinese government, prompting further scrutiny over the implications of such investments on U.S. national security and political integrity. As the crypto landscape continues to evolve, the Trump family's activities in this space have become a focal point for discussions around ethics and politics. With foreign investors rapidly amassing the dollar Trump coin since its launch, the potential for these assets to be used as vehicles for political influence remains a pressing concern. The intersection of celebrity, cryptocurrency, and governance may redefine the boundaries of ethical conduct in politics, raising questions about how future administrations will navigate similar challenges. As the debate intensifies, the long-term implications of these developments will unfold, potentially reshaping the regulatory landscape for cryptocurrencies and influencing the intersection of politics and finance for years to come. The future of the dollar Trump coin, along with the ethical considerations surrounding it, is likely to remain a contentious topic as both supporters and critics weigh in on its impact on American political life. Ethereum's recent surge in market dominance has reignited interest and speculation within the cryptocurrency community. As of mid-May 2025, Ethereum's market share has climbed to over 10%, a notable recovery that mirrors levels last seen in May 2021. However, this resurgence comes with cautionary signals suggesting that bulls in the ETH market may need to temper their enthusiasm. Historically, Ethereum's rise to such overheated levels has often preceded sharp pullbacks. The current relative strength index RSI for Ethereum is showing signs of being overbought, echoing patterns from previous spikes, particularly one observed in July 2024. During that episode, Ethereum dominance peaked and subsequently fell more than 17.5% over the following 315 days. Traders are now closely monitoring the RSI, which has crossed above 80, indicating that a correction may not be far off. On the technical front, Ethereum's price is also signaling potential bearish divergence. Analysis of the 4-hour ETH/USD chart reveals that while prices are marking higher highs, momentum indicators are trending lower, a classic sign of trend exhaustion. Crypto trader Alpha BTC pointed out that this divergence could lead to a price correction of 10% to 15%, with potential support levels around $2,330 to $2,190. Despite these indicators of a potential short-term pullback, some analysts are adopting a more optimistic outlook. Michael Van de Poppy, an independent market analyst, suggests that a decline could present a buy-the-dip opportunity, positing that Ethereum could eventually climb towards $3,500. Veteran trader Peter Brandt has further speculated on a possible rally to over $3,800, reinforcing his sentiment that despite volatility, Ethereum remains a strong long-term investment. In a parallel development, BTCS Incorporated, a blockchain technology company, has announced a significant financing initiative aimed at acquiring up to $57.8 million in Ethereum. This strategy aligns with BTCS's efforts to enhance its validator node operations and capitalize on Ethereum's growth trajectory. Charles Allen, BTCS's CEO, emphasized that this capital infusion is intended to scale their operations, likening their strategy to MicroStrategy's approach with Bitcoin. The company has already initiated the first tranche of $7.8 million, which reflects a growing institutional confidence in Ethereum. Adding to the positive momentum, the Ethereum Foundation unveiled its ambitious $1 trillion security initiative, which aims to bolster Ethereum's security infrastructure to support trillions of dollars in on-chain value. This initiative is designed to enhance institutional trust and broaden Ethereum's adoption, potentially serving as a catalyst for future price gains. With a structured three-phase approach, the initiative will address vulnerabilities across Ethereum's technology stack, implement improvements, and enhance communication regarding its security posture. As Ethereum navigates this critical juncture, investors are reminded of the inherent volatility in the cryptocurrency market. While the recent uptick in market dominance and the positive developments from the Ethereum Foundation are encouraging, the potential for short-term corrections remains a significant factor. Stakeholders will be keenly observing both technical indicators and broader market sentiment as they position themselves for what lies ahead in Ethereum's evolving landscape. The coming weeks will be pivotal not only for Ethereum's price but also for its role in the broader cryptocurrency ecosystem as it seeks to establish itself as a robust alternative to traditional financial systems. In a significant development for the cryptocurrency market, the U.S. Securities and Exchange Commission (SEC) has officially delayed its decision on the proposed spot exchange-traded fund (ETF) for Solana, a popular blockchain platform. The SEC's recent filing indicates that the deadline for a ruling on Grayscale's Solana ETF has been pushed back to October 2025, a move that has sparked both concern and optimism among investors eager for regulatory clarity in the crypto space. The decision comes on the heels of a similar delay concerning a Litecoin ETF, highlighting the SEC's cautious approach as it navigates the complexities of cryptocurrency regulation. As the agency scrutinizes these proposals, the implications for institutional adoption and market liquidity remain a focal point. Spot ETFs, which aim to replicate the real-time price of the underlying asset, are viewed as crucial tools for attracting institutional investment and enhancing market accessibility. Historically, the launch of Bitcoin spot ETFs has been credited with driving significant investment into the sector, evidenced by Bitcoin's price surge past $50,000 in early 2024, shortly after the introduction of such financial products. Ryan Lee, the chief analyst at BitGet Research, noted that while the inflows for a Solana ETF may not rival those of Bitcoin, the establishment of a regulated investment vehicle could bolster Solana's adoption among institutional investors. The introduction of a Solana ETF would provide a credible means for institutions to enter the market, potentially leading to billions in new capital, he explained. Despite the SEC's delay, investor sentiment remains robust. Data from Polymarket, a decentralized betting platform, shows an 82% probability that a Solana ETF will be approved by the end of 2025, alongside an 80% chance for a Litecoin ETF. This optimism reflects a broader confidence in the potential of ETFs to enhance the credibility and stability of cryptocurrencies. Looking ahead, the SEC is also expected to make decisions on several other ETF applications in June, including those for Polkadot and XRP. The deadlines for these crucial rulings are set for June 11 and June 17, respectively, with additional proposals for Dogecoin slated for June 24. However, given the SEC's history of utilizing the full 240-day review period for such applications, further delays remain a possibility. The potential approval of these ETFs represents a pivotal moment for the cryptocurrency market, as they could significantly influence liquidity and investor confidence. Such developments would not only enhance the regulatory landscape but could also lead to increased adoption among traditional investors who have previously approached the crypto sector with caution. As the market awaits the SEC's decisions, the current climate underscores the intricate relationship between regulatory oversight and market dynamics. The ongoing delays may present challenges, but they also highlight the evolving nature of cryptocurrency regulation in the United States. Investors and market participants are advised to stay vigilant and informed about upcoming SEC announcements, as the outcomes could have profound implications for the future of digital asset investment. In conclusion, while the delay on the Solana ETF and other crypto-related proposals may evoke uncertainty, the prevailing optimism among investors suggests a readiness for change. As the regulatory landscape continues to unfold, the potential for new financial products could pave the way for a more stable and inviting environment for both retail and institutional investors in the cryptocurrency space. The coming months will be critical in determining how these developments shape the trajectory of digital assets and their acceptance within mainstream finance.